So, hi Tim, just by show of hand, can you tell me how many of you are aware about UAE or are already working there or have been to UAE in the past? So, I don't see a lot many. So,
Most
I'll
of
be
us are
open.
very new to it. Most of us are very new to it, sir.
Okay, no worries. So, to start with, ICI itself has its own Dubai chapter, considering a lot of chartered accountants moving from India to Dubai and catering to UAE based clients. And I would say UAE is like a mini India. 70% of the UAE population are Indian and Pakistanis, and not the Pakistanis we feel in India that media shows us. They are all very friendly and live in close harmony with each other. So around 70% of us are Indians and Pakistanis. So it's a very cultural driven country, and there's a lot of prospects to grow. And people from over 200 countries, and they are based out of UAE. So it's like a mini world to us. So in India, we are Indians, we are divided by states. But yeah, the religion of UAE, and to be precise, Dubai is money. And most of the people come here to earn money and yeah, love this country and continue to stay here. So I'll start with the opportunities that are available for chartered accountants to grow in Dubai. So Dubai, people consider that yes, Dubai is a tax-free jurisdiction or Dubai is a tax-free jurisdiction or there is no tax. People operate out of UAE to save tax. This is not the case at all. It's a misconception which is present in the minds of the people and also the tax officers in India. So yes, but I'll come to the point on what all taxes are already present in Dubai and what all new taxes will be introduced. Yes, there are no taxes on individual. Whatever salaries or incomes you earn are tax-free. Yes, there are some social security contribution for GCC people, not for expatriates, what we call them, people who are not UAE citizens. They are called expatriates. There is no tax on them at all. Corporate tax, it's been newly introduced from 1st June 2023, where the major opportunities lie for Indian taxation. Because from our school life, we have lived with taxation. Taxation is a subject which was there even in our school mathematics curriculum. Leave aside chartered accountancy or graduation, we have studied taxation in our school. So yes, this is a major scope we chartered accountants can focus and yes, beat the European or the US consultants that are already present here. Before this, there is some taxation already applicable on the oil companies and foreign banks. But yes, that the volume is very low and we will focus more on the corporates on which the tax will be newly levied. There is an excise tax, only three commodities, carbonized drinks like Red Bull, salt waters, etc., and on tobaccos and on cokes and all. There is a custom duty of 5%. 99% of the items get covered in this 5% range, and which is very competitive if we want to use Dubai as a global trading hub. Dubai is in line to beat Singapore and Hong Kong and is a major trading hub right now due to its geographical advantages and the support that the government provides to the businesses here. There is a value added tax of 5%. The rate is fixed, not like India, where it ranges from 0 to 55%, with cess compensation, cess, IGST, CGST, nothing. Simple 5% VAT on the value. There is a tourist facility tax, like we take hotels and all they charge. There is a property transfer tax called as DLD in Dubai, which we call stamp duty in India. It ranges from 2 to 4%. In Abu Dhabi, Sharjah, it's 2. In Dubai, it's 4. There is no estate tax, which is a major advantage because yeah, not in India, but in UAE, they levy inheritance tax or estate tax. So a lot of people from UK, they like to move to UAE and yes, do the hierarchy planning or the succession planning based out of UAE. And there are some regional taxes like tourism fee, which is levied on hotel charges and all. And the rental tax, it is charged every month based on your rental value, known as Ijari here in UAE. So I'll come to the UAE corporate tax straight away. It's being newly introduced from 1st June 2023, and they have kept it very, very simple. Unlike India, where you have at least 4 to 5 books every time a new budget is announced, it's just a 70-pager document on the tax. And to keep it precise, they have laid down all the conditions, and the last rule is simple: where there is any dispute, whatever the department will say will be valid because they have not complicated it at all. So I'll come to the rates, which are competitive, up to 375,000 dirhams, approximately 80 to 82 lakh rupees, we can say there is no tax at all. So businesses earning up to 80 lakh rupees are exempt from taxes. And this tax is only on the companies and not on individual. And profits above 375,000 dirham, which is above 80 lakh rupees, will be charged at 9% only. And to keep in guidelines with the OECD regulations and all, where the net profit is above 750 million euros, it will be levied at 15%. So we'll not focus on this segment. We'll focus on bulk of the corporates that will fall in the second category above 375,000 dirhams, where 9% tax is levied. It is very competitive compared to the other GCC countries. KSA, Saudi Arabia, it levies 20%, Qatar 10%, Oman 15%. So the 9% rate is very good and businesses are welcoming this move. It will remove the black money tag in UAE. Let's say the businesses come to UAE to earn black money or to avoid taxes. This will go away and it will become a major global and business hub. The result of this would be seen in another 2 to 3 years when the new set of companies will start moving their headquarters to UAE. Already most of the MNCs, Fortune 500 companies are already present and this number is going to increase. Now I'll come to how the financial year is calculated here. It's not like India, like financial year assessment year. They are simple. Whatever accounting year you follow will be your tax year. No need to change, no need to align your books with the tax laws, etc. Let's say your financial year is Jan to December, pay taxes according to that. If it's April to March, stay with April to March and file your return and pay taxes according to that. So the taxes are being introduced from 1st June 2023. So for the businesses, as and when the financial year will start, after this date, will start falling under taxes. Let's say my financial year is Jan to December. The taxes are being introduced on 1st June 23. So for me, the taxes would be applicable from 2024. I need not pay the taxes from 1st June to 31st December. They say your this 7 months will 6 months will not be counted. Your taxation year will start from Jan to December. Let's say my financial year is April to March. My taxes will be calculated from April 2024 till March 2025. So this is very simple. So by show of hands, if you have any question with respect to the dates, because there's a lot of confusion in the international tax community on how it will be calculated.
Yeah, we don't have any question. Ritesh, you can move ahead.
Yeah, thank you. So the authority that will be responsible would be Federal Tax Authority, FTA. It is also responsible for collection of VAT, excise, custom duties. So there is no multitude authority that we would be dealing with. It's the same FTA that will do. So there's no GST, income tax or custom department separately here. The responsible person from FTA will be only responsible for all the taxes. So yeah, in the taxes, the other major relief they have introduced is the small business relief regime. I'll keep it simple because it's not possible to cover the entire taxation in a single section. So I'll take the crisp of that. So they introduced a relief called Small Business Relief Regime, also commonly known as SBRR. What they said is if your gross revenue is below 3 million dirhams, which turns out around 6.5 crore rupees, if your revenue is less than 6.5 crore rupees in that financial year and the previous tax period, you did not pay any tax, even if your profit crosses 80 lakh rupees. It is a major relief to small businesses. It's a welcome move because what the UAE government believes is, yeah, we are here to not earn money from you. We are here to make businesses and people happy, and in turn, they'll make the country rich. The agenda is simple. It's not a democracy. It's ruled by a ruler. Yeah, but their mindset is clear in terms of this. So if the revenue is below 6.5 crore rupees, we need not pay any tax. We can apply to the FTA. It's a simple form that we want to opt for SBRR. There are certain restrictions on it that it should not be a qualifying free zone. I'll come to what is free zone in my next slide. But yes, if you are a free zone, you are not liable to opt for this scheme. To brief up, because the free zones at all would not be taxable. and we are not a member of a big multinational enterprise group. It means the gross revenue of the group does not exceed 3 billion dirhams. Let's say Microsoft enters you. It's already there, but for example, let's say Microsoft enters UAE and forms a company. It cannot take this exemption because the group revenue is exceeding 3 billion rupees, 3 billion dirhams. So this 3 million dirhams is valid till 26 December 26, but it's possible and highly expected that this will get extended to further years. This revenue threshold might change, but yeah, it's expected this will keep on extending and the government will keep on benefiting the small enterprises. So I'll come to what is free zone. So yeah, so UAE is divided into two segments, mainland and free zone. It's like in India, like normal and SEZs. Yeah, in SEZs are limited in India, but there are over 40 free zones in UAE and its mainland. Earlier it was segregated because there was a requirement of a local partner for a mainland entity, also known as LLC, that 51% shares will be held by local. 2 years ago, this condition has been removed. Now a foreign person can own his company 100%. There is no need for a local partner to be there. So what is free zone is? Free zone is the economic area which has its own specific regulations that do not apply to other areas. So some of the free zones which we might have heard are Jebel Ali Free Zone, Dubai Airport Free Zone Authority, Dubai Internet City, Medan Free Zone, Ajman Free Zone. There are more than 40 free zones like this. So what are the benefits of being in a free zone as compared to a mainland? The companies in free zones, they are taxed at 0% and will continue to be taxed at 0% after the corporate taxes are introduced also. So they enjoy a preferential custom duty similar to SEZ in India. When the goods are imported into a free zone entity, no tax custom duty is levied on them till the time they bring the goods into the mainland. And there are various 100% export and import exemptions which are not available to a mainland entity. And the other ownership clause I already covered. And the other major thing is the privacy. So when your company is incorporated in a free zone, a person who is apart from the owner of the company, let's say if I want to access any company's data, I cannot do that. So your privacy is always maintained when you set up a company in Dubai. So I'll say how the free zone taxability will be dealt with after corporate tax introduction. Things are still in nascent stage. The whole of the taxation charter has not been introduced, but yeah, it has been introduced in phases, and we are catering to what the situation is as of today. It might change at a later date, but as of today, the free zones will be taxed at 0% to a maximum of 50 years. Let's say if I set up a company today in free zone, I'll continue to enjoy 0% taxation for at least 50 years. Whatever profits I earn will not be taxed. It's a major advantage. There are some things which we cannot discuss in the platform, but yeah, one-to-one sessions, we can take how the businesses can structure itself, incorporate in a free zone as compared to a mainland, and how they can use this taxation advantage. It's not tax avoidance, it's taxation planning, which is completely legal. So why free zones will be exempted from taxation? How it would be exempted? They need to show adequate substance in UAE. Yes, the free zone has been incorporated and it's working, doing business in free zone, and not that the company is just set up as a sham entity just for the billing purposes. It derives qualifying income. Qualifying income definition is still not released by FTA. So there are some, I would say, no clarification is available till date. What all incomes will be taxable for free zone and what all will not be taxable. But on a major level, when the free zone is transacting out of the UAE, the purchases and sales are not within UAE, it will be exempt from taxation. Comply the arm's length principle. It should not be like that they have the company in mainland and one company in free zone. The free zone company builds the mainland entity. It should not be like that. They should comply with the arm's length principle and also maintain the transfer pricing documentation. It's where the role of the chartered accountants of India increases because we are well versed with the transfer pricing regulations, the arm's length pricing principle, how to do transfer pricing audits. So the role of the Indian chartered accountants increases here. We can assist a lot of companies here the knowledge of transfer pricing is still at nascent stage in other countries. And yes, Indian chartered accountants can gain an added advantage when we start consulting companies on these areas of transfer pricing. So anything question about corporate tax on the basic level?
We'll come at last. The question.
Yeah, I'll move forward. So now I come to the VAT. It was a hot topic till past before this introduction of corporate tax. But now the things are mostly stabilized in terms of VAT, and the role of chartered accountant increases in FTA audits. Now the government has started issuing notices for VAT compliances and all similar to GST notices. And yes, here we come, the chartered accountants who can offer additional services. Initially, there were a lot of BComs graduates who started practicing in this field. But the ground reality is they are facing a lot of issues in getting the FT audits done. And now the clients are coming back to chartered accountants. They are realizing our worth, the fees that we charge to them, and are willingly moving their files from other persons to chartered accountants. So what is VAT? VAT was introduced on 1st January 2028. It's levied on the consumption or the use of the goods. The rate is fixed 5%, not in India like slab-wise. It's fixed at 5% on almost all the commodities. So what's the registration criteria? FTA itself don't approve the registration on the first day. They say that you have to meet the minimum sales revenue numbers to get yourself registered with FTA. What's that limit? They have divided into two, mandatory and voluntary. Mandatory, they say, when your taxable supplies, including zero rated. Zero rated means export of sales or goods, services or goods. When it crosses 375,000 dirhams, approximately 80 lakh rupees, you need to get yourself registered within maximum 30 days. If you do not get yourself registered, then there is a penalty of 10,000 dirhams, equivalent to 2 lakh rupees for delay registration. And what's the voluntary registration limit? It's 187,500. When we are able to show to FTA that yes, our turnover has reached 187,500, approximately 40 lakh rupees, then yes, we are willingly offering our registration to you. We want you to register ourselves and we want to start paying taxes. So this is the limit. FTA is strict about that. And the other major part is the profit margin scheme. I'm only covering crisp topics which people even in UAE are finding it difficult to cope up with. And yes, here we can offer our consultancies remotely to UAE based clients or to the Indian based clients who are willing to move to UAE. So what's the profit margin scheme? What the government says, let's say you bought a good from a second-hand dealer or an unregistered person and now you sell it. Take for example, a used car. Used car gets sold by a showroom to a retail customer. It charges VAT on that. And let's say if I am a used car dealer, I'll buy a car from the customer and sell it to someone else. Because I do not have paid VAT to the customer on buying it, I need to charge full VAT. As in India for GST cases, I need to charge full VAT. But the government has introduced this profit margin scheme saying that even if you do not have paid the input VAT or do not have the invoice for that, still you can pay tax only on your profit margin. You do not need any additional documentation. In case of VAT audit, we only need to show to them, yes, that in our good faith, we believe that VAT has already been paid on these goods. So what they have listed is, because VAT was introduced on 1st January 28, so if the goods was initially bought in 2017 or earlier, it would not have been subjected to VAT. So then whatever you sell, it will be subject to VAT at the full rate. Let's say I'll talk in INR. Let's say I bought a car for 5 lakh rupees from the customer and sold it for 6 lakh rupees in the market. I now need to charge VAT 5% on full 6 lakh. I cannot pay tax on 1 lakh because the car initially sold was not subjected to VAT. And if the goods was sold 2018 or later on, the supplier did not charge VAT, or we do not have a substantive evidence that VAT might have been charged, then we need to apply full VAT. Let's say I bought a chair, second-hand chair, and sold it. I'm not sure whether the customer paid VAT initially to the chair share wholesaler or retailer. If I do not have his invoice, now I need to charge VAT at full rate. But if I am able to show, let's say in case of cars, I am certain that VAT was initially paid by the customer when he bought from the showroom, car showroom, then I can charge VAT on my profit margin only, even if I do not have the invoice of the customer or not. So I'll take this from the Delhi VAT scheme for used car. In Delhi VAT, the government had this option to pay VAT on your margin only instead of the full price, but they required the initial invoice. That was practically not possible because let's say car was initially bought in 2015, customer might have lost that invoice. They needed the original invoice. Customer might have lost that invoice, or it's not available, or it's with the bank when he took the mortgage. Then I was not able to pay VAT on the profit margin. I needed to pay the entire 12.5% VAT on the full value. But in this case, if I am certain that VAT was paid, I can be in the profit margin scheme. So I'll come to how the FTA audit process, which I was talking, where the CA can add a lot of value to the client and compete with the other tax practitioners here in UAE. So what FTA does is similar to all the jurisdictions, they issue notice initially requesting for the VAT data or sale and purchase registers. The timing there are stringent. We need to submit the response within 5 working days. They do not offer much of the extensions till the time we substantiate to them. As soon as the VAT FTA notices are received, we need to reply. So what we are proposing to the clients is to keep all the data ready for the last 5 years, have all your documents ready, have all your sales and purchase registers ready, so that we can immediately reply to the FTA, and FTA appreciates immediate response. It shows to the FTA that we were prepared and we had nothing to hide from them. So FTA might ask further information from us, and it asks within 10 days or 15 days. It's not like the income tax where we file the reply and the notice comes after 3 months. They issue the notice for further information within 10 to 15 days. On a very rare cases, they might visit the premises of the taxable person and they give the prior notice. I'm just talking about the differences between India GST and FTA. GST officers visit the premises of the person without any information on notice, which is creating a lot of issues now. The owner might not be present or the details are not there. FTA will issue you prior notice on email and some cases hard copy also, and then visit. And within 10 days from the closure of the audit, it has to issue its final decision. So the timings are stringent and it's get closed in a very timely manner and not in a haphazard manner. The FTA is very cooperative in terms of audit data. It cooperates with the assessee. If some data is not available, it entertains that. It accepts the fact that you are here to do business and not only to maintain tax records.
There's a question here, Ritesh.
Yeah, please.
Yeah. With regard to this FTA notice, like how's the selection criteria for sending the notice?
So notice they have their in-house softwares. They have not made it public like income tax. What is the selection criteria? But it's mostly, let's say, if there's a lot of deviation in your taxable figures. In one quarter, your revenue crossed 5 million, and in the other quarter, it's just 1 million. So then they issue notices. Or if your tax payments or returns are always late. And the other condition is if you are operating in a very high risk industry, let's say automobiles, jewelry, precious metal trading, then they might issue notices.
Okay,
It's
so
just computer based and not arbitrary or manual.
right. So once you receive the notice, then only the role of a chartered accountant comes in.
Yes, but what we are preparing to the client is because the timing is very stringent, just for 5 days.
Okay.
So it's always better to keep all your data ready in advance to do all the reconciliations. And other point I like to add, so how the VAT returns are filed, unlike GST, there is no matching concept here. It's not like the seller will punch in your VAT registration number in its return. It's the gross amount. It's a one-pager return. The seller only puts the gross amount in its VAT return. So department cannot trace one-to-one what you bought and what you sold. So it's always better to have your purchase and sale register ready. Disallow all the non-VATable items. If you mistakenly have taken the credit, be upfront and on the first day only disallow all your expenses which are not VATable.
Right. Right.
Yeah, because there is no matching concept. Businesses are more prone to make more mistakes in terms of reconciliation. Because when the VAT was introduced, because audit also is not mandatory here in most of the cases. So people are not used to maintaining proper records here in the past. So they might have made some or the other mistakes, and it's always better to be prepared in advance and keep all the data ready even before the FTA notice is received.
And in the free zone, there's no requirement for preparing books also, I believe.
So there is a requirement for preparing books. In the memorandum, they said you need to make accounts, but audit is not mandatory. In some of the free zones like TCOM, which falls under Dubai Development Authority, like Dubai Internet City, Dubai Media City, they have made audit mandatory and we need to file audit report with them. But in most of the free zones, it's not mandatory.
Okay, and who are the people eligible to do the audit there?
Yeah, if I come at a last stage where I tell you about the opportunities for chartered accountants.
Right. Please move ahead. Go ahead.
Yeah, thank you. So about after the taxation, corporate tax and VAT, there's another major regulation, the compliance, where the chartered accountants can add value is the economic substance regulation. This is not followed in India and not applicable in India. So what happened was UAE was put in the grey list by European Union, saying that most of the companies are operating here and shifting their profits from European Union to UAE. And actually, they are not operating out of UAE. It's just the billing that is being done through UAE. Because there was no taxation, there was no exchange of information by UAE, and there was no substance. What they did was they just set up a company here, hired one employee, and started doing billing. Billing was of billions of dollars of rupees, and then there was no employee at all in UAE. So then they introduced this economic substance regulation. So this is the economic substance regulation. What we need to check is whether the licensee means the company, is operating out of UAE. It has the company registered in UAE. If not, then economic substance law does not apply to that. They are out of this. If it's in UAE and carry out relevant activities are these. If it's in banking, insurance, because in these segments, there's a high chances of shifting of profits. If you are operating in banking, insurance, fund management, financial services, leasing, or you have your holding company here in India, or a distribution or service center, you have your IP rights here, you have your shipping company here, then there's a high chances that you might shift your profit from other countries to UAE to save on taxes. And if you're carrying out relevant activities, you will fall within this law scope. If not, this law does not apply to you. We are out of this scope. If we are carrying out a relevant activity, then we need to test whether actually economic substance is applicable to us or not. Whether we are in substance operating out of UAE. If it's met, then file the declaration with the regulatory authority. Yes, we are meeting the economic substance. If not, say that, yeah, file a negative declaration saying that we do not meet the economic substance regulation, or we are being taxed on this profit in other country itself. So what's the test of this economic regulation? Whether the management of that company is actually based out of UAE, educate management people, or the decision making is done in UAE, and it's not just a shell company. The income in the UAE entity is actually being driven from the businesses done in UAE. There are adequate number of qualified employees which are present in UAE. We have physical assets or the assets. We are incurring a lot of expenditures in UAE. In short, we need to substantiate to the regulatory authority that our company is actually operating. It's not just a paper-based company incorporated for billing purposes. We are in principle operating out of UAE. So what chartered accountants do here, or what we all can do in future also in terms of this regulation, is review the accounts of the company. They review the board minutes, board meetings, the AGM documents. If actually also substance does not meet, we need to prepare the client in advance on how they can structure their transactions or how they can route their meetings to show the substance in UAE. Because what usually happens is around 90% of the companies formed in UAE are owned by outside expatriates. So we can advise them to hold board meetings in UAE or to have a proper office or to assess their books of accounts on how the transactions are being done or how it can be managed. This economic substance regulation is highly technical in terms of this, and only qualified tax professionals like us chartered accountants, we can review the client's book, we can have discussions and meetings with them and advise them on how to fulfill the substance requirement, because the penalty is very stringent for not filing or wrong filing of this substance reporting is subject to 50,000 dirham penalty, which turns out to be approximately 11 lakh rupees. It's per financial year. First penalty is 11 lakh rupees. And in turns, if we, in the second year also we filed wrong reporting or did not file at all, it doubles to 22 lakh rupees, 100,000 dirhams. So it's very important for us.
There is no concept of POEM in UAE, place of effective management.
So yes, there is no concept of poem, but to do the substance regulation, we can show that yeah, educationally it was managed in India. For India, what happened when they introduced poem, they said that all of the board meetings should be in India, or all of the board meetings should not be outside of India when the place of effective management was introduced. So what companies used to do is hold just one board meeting out in India, and they were out of this poem regulation. So, but in this UAE, it's the substance. It's not that all of the board meetings should be in India, or yeah, it can be held at other places also. We need to substantiate that the intent of the management was to do business in UAE, and they're actually present in UAE and not the book business. Because in India, they have this educate 5 clauses, you have to meet them, or otherwise you fall in poem or out of poem. In UAE, it's more of a substance instead of checking the box in the regulation.
In India, we call ESR as an infection. We need to go that test. Right.
It's a good point. But yeah, ESR, I would say, is good enough law. The most important point of UAE, the introducing of this regulation was just to improve its brand image in terms in UAE, in Eurozone. Because it was put in the grey list, there was a lot of negative consequences for that. And now the situation has improved. So I'll share my email ID and number at the end. But yeah, how to cope up with this economic substance regulation and how to substantiate it, we can discuss it there.
I'm sure that's part of the FATF also, Financial Action Task Force.
Yeah. Financial Action Task Force are more concerned about the global profit, and for the due to the pressure of FTF, only the corporate tax was introduced. They have been planning to introduce for last 4 to 5 years. They have been pushing it forward, but yeah, FTF has been now very strict on UAE, pressuring UAE to introduce corporate tax, and now it has been introduced. That's why I said it's very positive for business.
How about the FATCA laws?
FATCA laws, so the reporting is stringent for UAE, FATCA and CRS. Both reportings are done, and banks and all diligently do that.
Please go ahead.
Yeah, thank you. So I'll come. So being a chartered accountant, we are already operating in India. We have our own client base in India. So there are a lot of opportunities. What we can do is, and not being even physically present in UAE, we can continue to stay in India and render the services to the clients based out in UAE. So what we can do is company setup. The queries for company setup, being myself in this field, I would say it has increased many-fold in last 6 months. Especially after Expo 2020 and the way the country handled the COVID situation. There was lockdown for only 7 days in UAE, and that too from 11 p.m. in the night till 5 a.m. in the morning. Apart from that, no lockdown at all. So a lot of clients, a lot of individuals are now planning to move to UAE, not only from India, but globally. So there's a lot of opportunities for chartered accountant in India to advise clients to explore UAE as a business hub. UAE itself has a geographical advantage in terms of trade. Singapore is mostly dominated, I would say, not in negative sense, mostly by Philippines and Chinese people. UAE still has a lot of Indian culture and a global culture within itself. So clients are willing to move to UAE for their trading business. So we can advise clients on company setups in UAE. Their taxation compliances are being introduced like corporate tax, and the structured compliances will increase going forward also. The statutory compliances like ESR, reporting, regular maintenance of the books of accounts, the clients are now diligently following it because banks have now started asking for balance sheets during loans and all, reconciling VAT returns with the financial statements. So the books of accounts should be maintained properly. Till past, it was not done in the manner which it need to be done. The auditing part, someone raised a question about auditing also. So I'll be more specific on this auditing part is we chartered accountants can't audit in UAE. What we need to do is take the sponsorship of a local Emirati who is a finance graduate, because we studied for 4 years, did all the examinations, training and all, then we got the right to do audit. In UAE, even if you are a finance graduate with 5 years of experience, you can do the audit. But yeah, the condition is they should be the Emirati. So what chartered accountants do here, they partner with the local Emirati sponsor, use his audit license, and do all the work in itself. We do all the work. That Emirati partner signs the balance sheet. It's under the firm's name. So they charge a small percentage of the fees, or we can agree on a fixed annual fees with them, and we can do the audit. But the scope for audit will increase going forward also. With the taxation laws coming in, the audits will be made mandatory. More and more banks are now asking for audited financials for giving mortgage, because till now you can take a loan without giving audited financials also. Just on the sake of your bank statement for last 12 months, you can take a loan in UAE. But now the banks have started asking for audit reports, and this number will increase going forward also. So it's a huge business opportunity for audits.
What is the limit for the audit thing?
So as of now, there is no limit. It's only if you are operating in mainland or in some of the free zones, you need to get yourself audited.
Okay.
So unlike India, there is no revenue threshold for audits. It's mandatory for all in mainland, but still there is no filing requirement for mainland entities, but it will be soon introduced.
Right.
So consultancy, we chartered accountants can offer the strategy consulting. To them, the import-export consultation can be done, and HR consultancies we can do. There's a lot of consultancies which companies take, because we have gained experience of a stringent tax law, how the company shifted from a draconian law, I would say, be open here, from the draconian law system to a more relaxed system of taxation compliances. So we are in a better position to offer these services to our clients. Then the other thing is real estate. A lot of global people are buying real estate in UAE for all the reasons. It's tax-free rentals, it's easy to pay, the money is safe. So we ourselves have our own client base, and we can advise our clients to assist them in buying a property in Dubai. The cross-border consultancies. In India, we are focused only on the Indian businesses. But when we are in UAE, either physically or virtually, we get the opportunity to deal with businesses from all the countries. A lot of businesses operating in Africa are operating in UAE. We can offer them consultation. I would say because the Indian tax law and the Indian legislation is a mixture of everything. So when we have practiced the Indian taxation, we are in a better position to advise them on the global taxation application. So we can offer those.
Does UAE has a lot of DTAA signed?
Yes. Number I'm not sure of. I don't have the exact number, but with most of the countries, it already has a DTA in place.
Okay.
The M&A opportunities, there is a lot of M&A. The number of M&As are increasing in UAE because a lot of clients, instead of starting the business from scratch, they are buying the existing companies. So there's a lot of M&A scope already here, and this number will increase. Fundraising, there's a lot of HNI people who are present in UAE or in Europe who are based out of UAE, and we have startup clients in India. We can assist them in fundraising from UAE. We can tap the UAE HNI Indians also and foreigners also for investing into Indian companies. And the import and export business, as I mentioned initially also, UAE has a geographical advantage along with Singapore and Hong Kong. A lot of trade is happening from Abu Dhabi and Jebel Ali port. The number of ships are tremendous. For example, I would take from India, Bombay port to Africa. There might be one ship in a week of Maersk. But from UAE, it might be every alternate days or daily. So what people do is, globally they do it, they bring the goods to UAE, store it in a warehouse in UAE and dispatch it to wherever it is needed. The logistic infrastructure is very good. The airline network, the shipping network, it's very prompt, very fast and very structured. The custom port authority, they are very cooperative and it's a very speedy process and most of the process is online. So these all are the opportunities which we CA can tap to, along with the accounting and the other return filing, the compliances that we are already doing in India. And it would be very easy for us to cater to UAE based clients.
Right. Like, what kind of accounting opportunities you see? Like, are there a lot of companies outsourcing their books of accounts?
Yes. So a lot of companies in UAE, I would say there are a lot of self-employed people also in UAE, the individuals owned company or corporates also. So what they do is they outsource the accounting because it's always expensive to hire accountants in UAE. We ourselves have done this, built a strong accounting team in India. We cater to the clients in UAE and they outsource the accounting to our Indian staff. To give you a broad example is the difference between an accountant salary. Let's say if you are able to get an accountant in India in 20,000 rupees per month average in Delhi, the same person will expect a salary of around 1.25 lakhs in Dubai due to its cost of living. So it's always better to outsource accounting to India. A lot of this is already happening to Vietnam and Philippines, and yeah, the number can be brought to India also. And with the cloud-based accounting introduced, lot of accounting, even Tele offering cloud-based accounting services, Zoho, QuickBooks, it's now much easier to do outsource accounting. And this scope has increased and mostly IFRS is followed in Dubai, UAE. So, but yeah, we can adapt from the Indian gaps to IFRS. There's not much of a difference. If we talk about Ind AS and IFRS. Ind AS is just the adopted version of IFRS.
Right.
So this was all from my side. I tried to keep it crisp, not burden you with just all the facts and the data, which most of you can easily find on Google.
Yeah, in such a short time, you are able to give us so much input about Dubai taxation. It's incredible, I would say.
Yeah, but there's a lot of opportunities. Most of the things, it's my restriction. I cannot discuss on Zoom. Would like to have a face-to-face session so that I can discuss openly on how we CA can expand the businesses. So if you want, you can note down my number, my email ID at any time. Feel free to contact me.
Yeah, there's one question, like how do we attract clients in Dubai? Like, what do you suggest for us? Sitting in Calcutta, like what channel do we use?
So to capture to the clients is to, first of all, what we did, I'll tell you from my personal experience. Prepare the list of all the clients in Excel, not just in our mind, just write down names of all of our clients, what industry they are operating in, what businesses they are doing, and how we can advise them to move to UAE. Because I'll be open, around 30 to 40% of the clients are in trading. They're already buying goods from China or Hong Kong and selling in India. How we can say them to go to UAE, use the Switch BL network, meet the arm's length pricing, how they can save on taxes, do tax planning, not just selling India, capture to the African markets or European markets and sell there also. To go to outside clients, before that, we can talk to our existing clients. We all can collaborate and talk to the clients. Yeah, we all are friends. Convince them about the opportunities that are available to them in UAE, meet with them, speak with them. And after that, once we get a hold of what actually UAE is, gain an experience of that, then the digital marketing platform is actually good here. We can do digital marketing to gain clients. We have seen a lot of hits on our web ad, the advertisements that we run on Facebook and Instagram, querying about the UAE company setup. And from such places, we even did not imagine.
Right. And I believe that like we should always suggest our HNI clients to take the advantage of the LRS, like transfer $2.5 lakhs every year
Yeah,
outside
2.5
India.
lakh, and it's the golden time for them. They still have this 2-month window
Yes.
to save on that 20% TCS.
And in fact, I would like to share, like, I came to know about Ritesh, like I incorporated a German company in Singapore, and Ritesh is helping to incorporate that company in Dubai. So that is how I got linked with Ritesh. Yeah.
But
Any more?
HNI clients, I would say, so it's not just about LRS or moving of the funds. It's about the actual business opportunities that are
Yeah,
available.
yeah. That,
Would invite
from there
all
we
of
can
you
start,
whenever you are free to just come to Dubai once. You will see the city changes every day.
Yeah, I would request our president to organize a delegation to Dubai so that we can all travel and meet you also there.
Even ICI understand this. They have their Dubai chapter set up.
It would be really very encouraging for us to go to Dubai for a 3-day or a 4-day delegation. Yeah.
And flight from Delhi to Calcutta, the pricing is same as Delhi to Dubai.
Right. Very true. Very true.
Getting visa is simple. In 4 hours, you will get the visa. It's just a 3-hour flight from India to Dubai.
There's one question from our president.
Yeah.
President, sir.
So if companies into export business from India,
Yes.
it help it set up a company in UAE. They are into
Yeah.
export business, say 500 crore plus business from India. Do you say that they set up a company in UAE for further growth and something like that?
Yes, because for example, I do not know the full client profile. Let's say the client is selling from India to Africa. If they are doing full container load, then it's fine. But let's say if they are doing half container load or less than the full container load, the pricing increases and they are only able to sell 1 to 1 day. But when they set up a company in UAE, they can dispatch goods from India to Dubai or Abu Dhabi. I'll keep say UAE only. From India to UAE, store the goods in the logistic warehouse only. Look for markets, explore for further markets also. The opportunity increases. Because when he is present in India, he is only focusing on one market, Africa. But when he brings the good to UAE, there's a lot of domestic consumption. There are already a lot of traders who might be selling goods to that country also. The range of the products can increase. The timeline will reduce in terms of dispatching the goods because the logistic network between India and Dubai is very good, and it's going to improve. And if you have read in the news, they signed a bilateral treaty some time back. The logistic network will increase. And from Dubai, they already have a very well connected logistic network. So the time limit will reduce. The forex flow is free in UAE. So it would be easy for him and faster to use UAE as a hub to do export business.
And further, it gives you a global perspective also to do business.
Global.
Very important. Yeah.